Better, I'm sure it's very visible to everyone right now.
All right. I would focus on this. I think the thing that was missing will be the images. I'll just scan through quickly. This is, I explained we have videos that we've done in particular for Nigerians that want to invest in the UK. This is part of what we used for the conference we held in Nigeria last year. So please get your access to that. This is publication we did last year. How Nigerians can leverage investment in the UK, diversifying their ports. Okay, so we talked about strong economy, reasons why Nigerians invest in the UK. Strong economy, strong legal system, high returns. I'm going to show us some numbers. Diverse opportunity in different types of property. Education driver. A lot of people come to the UK for education. A lot of people send their kids to the UK for education. Nigerians are familiar with the UK structure, a financial advantage, because you can use your pounds as a leverage against devaluation and all of those things. Investor support. I said, we've got a system in place that streamlines everything you need to do, from speaking to a mortgage broker like myself, or a legal person, or a letting agent, or someone to open your bank account, someone to set up your company. We've got all of that we can support you in-house. I said it's important for us as investors to understand the numbers. So this manual way there. Is it moved now?
Yes, sir. We're on the second slide right now.
Okay, all right. Let me do it manually then. That's fine. So talked about books, talked about why people invest in the UK. The videos we've done in the past, just give yourself a chance just to listen. Again, education in this is very important. Always understand what you're doing before you invest. Some of the population we had in Nigeria, encouraging people to leverage the UK system to diversify their wealth. I'll run through this again. So what you can see now is a stable economy. Is that correct?
Yes, sir, that's correct.
Okay, thank you. Yeah, so stable economy, that's one of the reasons people invest in the UK. We have a strong legal system. I say, don't trust me, trust the system. And that's what most people do. High returns, we'll show you some numbers compared to what people get in Nigeria for the same amount of investment. And diverse opportunities. We have different sector and different segments: residential, commercial, student accommodation, education driver. A lot of people bring their kids abroad to study. A lot of people have studied abroad before, so they have that familiarity with the system. It's a familiar market. The financial advantage, currency edge. UK pounds is considerably stronger in most countries. So that's something that people use, especially for Nigerians, especially with Naira devaluation and all of those things. Having money in a different currency. People do. Currently in Nigeria, they have a dollar account, they have a Naira account. So it's just that convenience for you as someone thinking about your wealth on a global platform. So I said, important as an investor, data is important to you. You want to understand the numbers, because if you are investing, the numbers, it's what matters, or else you're just doing it for your emotion, which is not a bad thing. Some people buy London properties as a trophy to say, I have bought property in London. But to you to think about a business, about investment, think about what is bringing back to you. So we talk about the return on investment. We talk about the return on capital employed. I'll explain that shortly. So, given an example in Lagos where they were showcasing 10 most expensive estates, I used that figure to be able to draw out what is the return on investment and what's the capital employed. The important thing to note with Nigerian investment is your capital employed is because you are using cash, there's no leverage. So you're not getting as much value from the money you are putting in. So in a business, you want to say, what is my input into that business? And at the end of it, what is my income from that? What's my cash flow, or how much have I made as a profit from that? That's the way you want to see property. We've done similar stuff to give comparative analysis across London, seeing what's possible. We start seeing that the return on investment is slightly higher, but the big factor for this is the return on capital employed, because as an investor coming from Nigeria, you can get 25% deposit. It means that if you have 200 million you want to spend, you can spend 50 million of that to find the property to invest in. And again, you can do that 4 times for the same things. Yeah, there are costs to consider and all of those things which you need to work in. But the big factor is your return on capital employed is massive, because you're just taking 1/4 of the same amount. You're using 1/4 of the same amount that you would have used if you invested in Nigeria. So one property you will buy in Nigeria could potentially buy you 4 properties in the UK. And when you start multiplying that with the rental income you're getting, you realize, oh, wow, this is quite an interesting thing for me to get into. So we've done similar stuff, wider spectrum, to look at other places, Birmingham, Manchester, and stuff. One of the things I tell people to look out for as an investor is places that are going to increase in value very soon. So that's where a lot of the developments we work with are placed. They are regeneration area, they are transportation hub, they are communal towns that people are moving into, people are investing into. So those are the way to get things done properly. I think I said it, as an investor, even if you're buying your personal house, you don't make money when you sell, you make money when you buy. Because if you can buy 5% than the person next door, that means you have 5% equity that they wouldn't have. So that's the way to think about property investment. Yeah. So one of the concerns most people have with Lagos is there are lots of drama. There are a lot of situations. Recently, we heard about 176 estates in Lagos. It might just be news grabbing, but there's always something to watch out for. So you want to make sure that if you're buying property in Nigeria, you want to make sure that you're getting your documentation right. You are working with the right partnership, people that have got your back. So you're doing a lot of more yourself than you would need to do in other jurisdictions. So that's one thing. And the other thing that is important to mention is the cost of your ownership. So a lot of people don't factor that in. They don't factor the legal cost. They don't factor the survey plan, the infrastructure charges that at some point and stuff. So when you start putting all that together as an investor, your numbers are important. So you want to consider how much cost is it adding up buying in Nigeria and buying elsewhere. Elsewhere, like UK, you have stamp duty costs, you have maybe ground rents or things, you have other things to cater for. But in the scheme of it all, it's far less than you will get in Nigeria. But more importantly, you know these things are structured and they are going to the right channel. And you have your documentation to prove that. So say, I have paid this. I'm not concerned 5 years' time if anything changes. So that's quite important. We quickly talked about mortgage, which is the reason why a lot of people are on this call to see, as a Nigeria, how can I get mortgage in the UK to buy property, investment property in the UK, or residential property in the UK. So I'll scan through that. The very important thing is you don't need to be a UK resident. You need to show proof of ID, as you would expect. You need to show your income and employment proof. Either you are employed or you are self-employed. You've run your business. They want to see like 2 years running record of your business. And the deposit amount, like I said many times, 25% is a sweet spot that we are getting people from Nigeria should be able to leverage on. So you only need 25% of the total amount of property. So let's say property is worth 100,000. For simple numbers, that 100,000, you only need 25,000. Obviously, there will be some cost relating to that, like anywhere else you buy a property. So that's just something to note. Creditworthiness, we only need to see like 6 to 12 months bank statement. Property type, you can be residential or buy to let. Anti-money laundering is an important thing, and I don't want anybody to shy away from this. Nigeria is considered as an high risk, so there would be very detailed level of questions that will be asked. But these things are not rocket science. If you've done your account well, you've run your transactions well, they are straightforward questions you can answer. So essentially is to prove your source of funds, source of wealth. That's the most important thing. How have you accumulate your wealth? Is it over time? Is that a new contract? You just need an explanation that helps everybody to be on the same page. So I've talked about one of the fantastic things we do is to bring every partner together to make it easy for you to buy a property in the UK. We have a platform that is dedicated to that purpose. And we do a discovery call, just knowing what you're looking for, knowing where you are in the market, what you need to do. Then you do a reservation. We link you up with the right solicitors. Your KYC, you can do through the system. You exchange contract if it's a new build, or if you're buying old as well, and then you complete. We would then know at what point, from a mortgage point of view, that we will need to come in. If you're buying off plan, it might mean that we'll do an initial assessment to be sure that you can get a mortgage when the completion happens. And 6 months down the line for the project to complete, we would come in and then complete the mortgage process, and then you can complete. But for some, you're buying a property that's already been established, already been built, then there's no long wait. You can buy the property, go through your mortgage at the same time, and then we can help you to complete on that. So these are just some examples. This is Itro. I've just chosen these out of many possibilities of properties we could have chosen. This is just to show sometimes when you're buying property, look at not just the regeneration up, look at the transportation up. Easy access to a location would mean that more people will be interested in that location, especially if you're talking about Itro. Itro is the biggest airport in the UK, and it obviously has a lot of demand in those areas. Either people working there, people coming in to stay 1 or 2 nights before they travel. So many things happen. So this is a good location for people to consider. So it's just one of the possibilities of what is possible. What we encourage everyone to do is reach out and let's take you through your own personal journey. And we can show you projects that are relevant to you, or explain this properly to you again. To say, for your situation, this is what you need to put in place. This is how we're going to help you to hold your hands throughout. So that's very important. So when you're seeing this project, just don't think, oh, that's the only project Deji is showing us today. There's a lot more projects. There's a lot more partners we work with that can show you many more projects. So this is another project. This is Liverpool. The good thing about this is it's giving you 6.25 return. But one important thing I wanted to show on this project is it's based on short-let Airbnb model. So a lot of people would know Airbnb, and it's a way for people to increase their earning potential on their property, which is a fantastic thing. But not all development, not all places can you do short-let. So when you have development that allows you to do short-let, then that's a fantastic thing. They are usually maybe around the city center. They've been approved. You have your lease already approved to do short-let. You will partner with a short-let operator. We want you to think about as an investor. We don't want you to say, I'm operating this myself. We want to give it to the right people that knows how to manage things, pay professional fees, but you're going to get much more value than what you would have done by yourself. So this is a fantastic model. And again, this is an option that is available. This is the portal that I'm talking about. So for everyone on this call, please just go on to propertyconcierge.popviewer without the e.com. We'll send it to everybody that joined this call. The important thing about this is you have many options to work with. You might not be interested in buying property in London. You might not be interested in buying property in Manchester. You might want to consider supported living, social housing. There's many options. There might be student accommodation. That's what you're interested in. You can use the portal, find the right thing, and this portal is seamless enough to take you through the process and help you in this journey. So please, I would encourage everyone to at least see what is possible. And just to say, not all the properties that come through are listed. So there are other deals that come saying that's not listed on the portal. So we can make it very, very bespoke to each investor. So student accommodation is another option for a lot of people. And sometimes we run a lot of discounts on this. One important thing to note about student accommodation is you're getting a net rental return. It's being managed by a professional that understands the student market, and you get 7% net. I explained it earlier. 7% net could mean you're possibly getting 9%, 11% gross amounts. But net is what comes to you as an investor. Yes, if you have a mortgage, you will pay your mortgage out of this. If you have insurance, you will pay out of this. So I don't want to paint an unbelievable picture. I want to make things realistic and know that you need to know your numbers, see how this works for you. So that's important thing. So with student-led, with a lot of projects that we have, even if they are leasehold, a lot of leasehold are over 900 years. So there's nothing to worry about. So if you don't understand leasehold or freehold, let's jump on a call. We would explain each of these things to you. I know a lot of people would have more questions after this call, which is good. This is just to show you as a collection, say what is possible, what you need to be thinking about and stuff. This is another opportunity in Manchester. Wonderful project coming up. And this is what you get, 7% net. This is guaranteed for 10 years. So this is quite a good stuff. So depending on when people are buying, currently you can get 25% discount from the launch price. So it just depends on when you are buying. Dickie's Yard is another student project. On this one, 86%. So people can start to understand, I can get property less than 86%, 86,000 and stuff. Yes, depending on where you're swimming out, we've got projects that's at different levels. So don't be shy to come and have a conversation on, this is how much I have, what can I do with that? And we can start preparing you. Either you're ready now, or you prepare you to make you ready for the future. We just came over this. This is social impact investment. This is a very good area that a lot of people don't understand yet, even in the UK. So, but the good plan is UK is a welfare country, and they make sure that they take care of people that are vulnerable. So there are certain types of housing that you can get. Partner with operators that run the care element of it. You provide the housing, they run the care element on it, and they give you guaranteed rental. But the fantastic thing is they can give you up to 25 years. That is peace of mind for any investor. But more importantly, you are just not taking the price now for 25 years. It's indexed to the inflation increase plus 1% and stuff. So you are over time maintaining the rental value of that area. Because the most mistakes most landlords do sometimes is to rent out their property and don't do anything for 5 years. By the time they come to 5 years, they realize that, oh, the property in this area has increased by 300, 400. Then they struggle to ask the current landlord to pay that amount. So it's always good from an investor point of view to have a yearly review and put that as part of the contract. That's a very strategic thing to think about. So government funding, it's available in the UK. You can tap into that. We can show you projects that would help you to get even 10%, 12% on some projects. So I'll just talk through that quickly. We've got supported living, assisted living, social housing, nursing home, so many things out there. But what I wanted to show, this could start from 110,000 in different locations. The good thing is you have complex built, purpose built for people that need the support. So on this project, you're getting 10% net and stuff. This, like I said, is just showing you the different projects available. I know it might be new to a lot of people. Social house might be new to a lot of people, just to test, to say this is what is possible. This is what you should be thinking from an investor point of view. This is a house, is a new build. On this one, you're getting 12%. This is already have a contract in place to partner with a care provider, and the care provider would work with you, the owner of the property, and pay you reasonably well for your property than you will get in if you're renting it out to just standard tenants and stuff, and you're moving yourself away from every tenant issues and all of those things. Because again, yes, buy to let, you need to have a balance to know that this could mean there are things that would happen over time that you feel like, oh, why am I even in this? But it's a business, so don't feel, oh yes, my tenants issues and stuff. It's part of the package. But when you think about it for a long time, take a long-term view, you realize that you're making a lot more money than most people would do, or any investment people will get into. Because most people will leave their money in a savings account doing nothing, actually losing money because the inflation is increasing beyond the interest they are getting on their stuff. And the banks are using your money to lend as mortgage, as credit card, as loan, and making better returns. So that's the thing to think about. Sorry for the issues earlier. I just wanted to look at any question we may have and anything else that I can go through. So I'll go through some of the questions. Okay, so yes, if we can share the link. Yes, okay, thank you. Thank you for sharing the link. I'll just go through the questions. If you have a questions you want to ask directly, I'm happy to bring you into the studio and then we can go through that. Let me just go from the top and see what questions. Okay, yes. Thank you for your patience. Apologies for this, but again, like I said, book a section. Let's go through a scenario that is very relevant to you. That's really where you can make more sense of this. Sorry.
Are you able to see the comment section, sir?
Yeah, I'll go to the question now. Just want to make sure. Sorry, 1 second. Okay, so let's go again. Thank you. So the question, is the session being recorded? Double check on that. I believe it was. Respond until after the presentation. If you can't respond, true. Thank you, madam. The session has been recorded. It said that earlier. Thank you. You sharing slides. Apologies for that. Really, I put my phone on do not disturb. That's why I didn't get your messages as well. The screen is not displaying. So let's get to the first question. We can see the properties. Okay, yeah, bridging loan, we can see the house. The bridging loan can be expensive. Yeah, bridging loan is not the option we recommend for anybody, but some people want to take a creative means. Like I said, for someone that maybe have 200 million from Nigeria, they want to invest, we can go simple solution and invest in maybe 3 or 4 properties without ports. Some people want to buy into more creative solution like the assisted living and supported living housing, these properties, they don't do it as mortgage. So the solution most times is either someone is buying it initially with cash and then we refinance. At the time we refinance, the possibility have 70% of the money left, which means they can't buy the next one. But if they still want the same project that is cash buy, then they will need to get um, bridging finance to support that. But it might just mean that if they don't want to go through the creative solution that provides them, they could then say, okay, now we bought the first one, we're getting 12% net. We've now remortgaged, we left about 25% in that deal. The 75% we have now, let's divide it into maybe 2 properties or 3 properties and then go that way. So that is a possibility. So it's not the first option to anybody, but it's a solution that is available and a lot of people are using it. More importantly, people think maybe because I'm not in the UK, I can't get stuff. We definitely, that is not an issue and you can still get to do that. But it's only for people that are thinking creative to know, yes, I'm paying potentially 1% on a monthly basis, but maybe they do it for 3 months, a short time solution, knowing that they've got enough money to exit that deal and then go and buy the next one. So what we do is to make sure that everything is lined up properly. So that's quite important thing. But this gets remarkable. Yes. So thank you for saying that. You can see better the slices showing all at once. Okay. Sure. Okay. I'm just going to questions. Yeah, so Olawande, if you have any question, Olawande Kayode, any question, again, let's go through a scenario that is relevant to you. That's where you could get the best solution. Either book a 15 minutes, 20 minute section. We'll go through what is relevant to you, where your situation is, and help you to create a plan going forward. So that's the most important thing. Advise as they work with the whole of market in terms of lenders. Okay, Deji, please address all questions and concerns, please. Yes, second slide. Yeah, thank you. I'm sure that you will advise. Yes, we've got to Nigerian market, we've got more than enough lenders that are happy to deal with Nigerians. Again, if you're not resident in Nigeria and you are in the UK, that's obviously a no-brainer. We can work with a lot more options. But if you're in Nigeria, we've got a selected number of lenders that knows the market, that wants to do business and make the process a lot streamlined. Again, when I say streamlined, it might be a different criteria to what you guys think, but they try their best possible just to make it easy for everyone because they want to lend the money. The money is there for them to lend. They see Nigeria or foreign investors as a pocket that they can attract, and that's why they are going for this. So everybody wins in this game. You as an investor, you win because you are not bringing 100% of the money to invest in the UK. The lender win because they borrow you money and they charge money on it on a regular basis. Just talking about interest, maybe that's of interest. I know when people think about interest in Nigeria, you're talking about 20% plus. But even as a foreign investor in the UK, there are unbelievable rates, less than 5% that we are getting for some lenders. But I say people should be prepared on average 6.5%. It could be between 4.5 and 6.5, which is a fantastic deal when you think about it and the leverage you are getting. That is a very, very important thing. So for people that don't understand that, that's the student accommodation have highly sold fee. All of that is costed in to give you the net figure of what you are getting. So different projects, different pricing points. So again, we can only speak specific to each project, and then you can understand what that is. Ellie Souza, I hope that helps. That answers your question. Again, bridging loan, I think I've explained it. If it hasn't explained your question yet, it's not the first option for anybody at all, but it's an option that is available. So you think about what is your scenario, what is your option. Some people, that is the only way they can start. That's work with. Some people, again, bridging works for people that are looking at adding value to properties. Maybe they are buying at these price points and knowing that I can maybe refurbish the property and then increase it by maybe 10%. By the time they calculate the bridging cost, it gives them the room to be able to take out their profit or remortgage and own that property. So there is different use case for short-term finance. You just need to understand how it works for you. It's definitely more expensive, but when I tell most Nigerians that it's expensive, they laugh at me. Feel like, how much is it? Like, okay, maybe 12% for a year. They feel like, is that what you consider as expensive? People don't see it as expensive because they have been used to 28%, 20% plus. So again, from the UK point of view, it's expensive, but this is not something most people would take for a long time. 3 months, 9 months, 12 months to create that chance for you to do something creative and then moving on to something. Either you are selling on the project or you are refinancing the project to a level where you're taking part of your money out. So that's the way it works. With investors from Nigeria or anywhere in the world, do they need to partner with someone who is UK resident? No, sir, or no, ma. I think the important thing I said on that is you don't need to have a UK residency. You can do this on your own. No longer is uncle, auntie, or brother, or sister, I want to buy a property, I want to buy it through you. Those things get messy, and I would encourage many people to move away from that. If you have a structure and you trust, you have a company, and all of that is structured from the onset, then that's fine. But be careful on such investment. That's very important because you are dealing with human beings. Things could switch. But to your question, you don't need to have a UK person. You live in Nigeria, which is a fantastic thing. You live in Nigeria, you can get funds for property in the UK. That is the unbelievable thing for most people. Leverage, that's the most important thing, which is what most people would not have access to if they are using the same amount of money in Nigeria. Any other question? Let me see under these. Can you reshare the slides again? Okay. Okay, so I can see the comment. You can see this. Yeah. There's no further questions, but again, I share the link in there. If you please copy this and register on, or send us a message to any of the numbers that have reached out to you, or by email, we'll be able to set up a time that we can go through your scenario. Everybody's scenario will be very different, and that's why you to go through how this would work for you. For a lot of our investors, it's something they are ready to do immediately. For some, they just want to understand how it works and prepare for it. Again, that's a very good thing to do because you are preparing ahead of time. For a lot of people as well that we work with a lot of partners. They possibly have bought property before, or they are not in the market to buy property, but they know people that wants to buy property or are looking for property or looking for mortgage or looking for investment in the UK, then they partner with us and we make it happen for them. So that is a mixed bag of different people we have on this call. Either you're a professional you're looking to buy investment in the UK for yourself, or you're looking to, as an estate agent or someone that works in property, you're looking to leverage this market that a lot of people are not aware of. This is like a product that you don't get everybody talking about. And that could be your advantage as someone that is into property. We partner with a lot of people and we can work out a win-win situation for all of us. So if you have anyone, either you know directly or indirectly, we can work with you and create that solution that works for you, works for your client, and works for us, making sure that we can bring as many investment for the right set of people that want to do investment in the UK. Again, this is where we talk about wealth diversification. Most people are looking at this not as a first time buyer, like I've just started work 5 years ago or 2 years ago. I want to buy my first property. I want to buy in the UK. That's not usually the type of client. These are people that have assets, that have created businesses, that have created wealth, that have income from their employment, and just now want to diversify that into a different economy for so many reasons. So your reason could be different from everyone else on this course. So would definitely encourage you to, let's have a conversation and then we can help you with that. What are the what's your take on joint venture? Good question. I'll answer that. With investors from Nigeria or anywhere in the world. Okay, so you don't need a partner. We've answered that. I'm just going back to question now. So if you still have questions, please make use of the comment section and drop your questions, please. What are the cost points for purchasing for a foreigner? So, top of my head, you solicitor's fee, depending on the lender you're working with, the solicitor's fee will be different. Some lenders were trying to restructure to create a simpler way for solicitors to happen. We currently maybe have one or two partners that have offices in Nigeria that can do solicitors as well. So that's solicitor's fee, mortgage broker fee. So depending on where, if we think we can support you on this journey, we'll tell you based on your situation, we'll tell you upfront what that cost is. So one of the good things about buying property in the UK is we'll try as much as possible to be upfront with the cost. You will have stamp duty cost. Stamp duty cost is one-off cost you will pay. Like I said before, there are costs every location where you buy things, but the good thing about buying in the UK is you'll possibly pay it once, you pay it to the right department, and you don't get bothered about that ever again. So those are your cost of acquisition. So top of my head, if it's not a leasehold, if it's a leasehold, you pay ground rent or service charge. A lot of the developments are making that as reasonable as possible because they don't want a situation where it's escalating unnecessarily. So that's something that we're seeing in the market currently. And so I've talked about stamp duty, which is possibly the major cost. Obviously, talked about the deposit you would need, mortgage cost, solicitors cost. Depending on the lender, you do a valuation because valuation would assess, is this property worth how much they are asking for, which is another good thing from a UK to Nigerian point of view. Most people buying property in Nigeria are buying up value, no guarantee on what that is. Yes, we've got professionals that will check, but again, the historic data is not there to back most of these things up. So that is one of the good things. You have an independent person checking on the property to tell the bank that this is what the amount they are asking for. If it's not what the amount, go back and renegotiate with the seller. So we've had those situations in the past. So that's valuation cost. You would open an account, part of the system would support you to open an account. In the UK, you open a limited company, which is the best option rather than buying in personal name. Yeah, there are a few costs there, but all of that will be very transparent upfront, and you can understand what you're getting into. If I remember some of these things, I'll come back to that. It means someone in the UK buying property in the UK will buy, so in the UK will buy with cash. No, if I've not made it clear enough, most people buying property in Nigeria buy with cash. But here in the UK, as a Nigerian living in Nigeria, you can leverage the financial system and get a mortgage. And that mortgage, from what I explained previously, could be between 25% to 40% deposit. So you as an investor, you bring 25%. Let's say your property is worth 100,000. You bring 25% of that in, then you would request for 75%. In this case, 75,000 from the bank to lend you for you to be able to complete. Your 25,000 plus the 75,000 from the bank would be the 100,000 they will pay to the owner of the property. So you don't need to buy cash. A lot of people do buy cash, and we can do have partners that we can link up depending on the property they are buying. That is not a problem. But what we are promoting more of is rather than take just one money and buying just one property, you port and create 3-4 properties. And further down the line, one of the good things about buying property in the UK is you can remortgage. So 2 years down the line, 5 years down the line, your property has increased in value while you're still getting money from it on a monthly basis. You can then feel like, let me now remortgage to 75%. So let's say, for the example I've used, the property in 10 years, just for easy calculation, has doubled to 200,000, plus or minus. In 10 years, if you're remortgaging, the amount you own was 25,000. So maybe this is something that maybe I should have spent some time on. Is 25,000 your deposit? The amount you own is 75,000. 75% of 100,000. If you now go to 200,000 for easy calculation, 75% of that will be 150. So now you are now remortgaging at 150. You are putting down the 50,000 on the equity. Your previous amount is 75,000 that you own the bank A. Now you've gone to bank B to now, based on the value of 200,000, you've gone to bank B to now say 75% of the 200,000 is 150. That 150 you have to pay bank A, because bank A would not stay on because you want to clear them off. So that 150 they're giving you, you paid 75,000 of that. You now have equity to be able to work with. Obviously, you leave 50% in the property, and the equity could be what you use for another deposit for another property. So what most people do in the UK in maybe 3-5 years plan is to say every 3 years, every 5 years, I will refinance to be able to take what is possible as the equity and then buy another property. So you can start with one and then start building over a 10-year period. You can build 3, you can build 4 property portfolio with just one. But for a lot of people that is coming with cash already, that amount they would have used to buy cash down property, they can get mortgage with the help of our company to get you a mortgage, 25% deposit, and we can spread that over 3 properties. Let's say 1/4 of that is used towards cost. That is the way people think. Or as a minimum, you get 2 properties from what you would have just had 1 property if you bought in Nigeria or if you bought cash in the UK. So that's the main thing. I hope that is clear, Olawande. It means someone in Nigeria buying property in the UK will buy with cash. No, I've answered that now. Mortgage, even for the student accommodation, good question. I've showed in one of the slides earlier, I showed the minimum loan amount most lenders want to give is 100,000, 150,000. So that's where we have limited situation for student accommodation. With student accommodation in London, with the right price point, you can get a mortgage and the right size. There's a minimum size criteria that they consider. But in other areas where the property are less than maybe 150 on stuff, people would have to buy cash for student accommodation. So it depends on how you want to play your game. But again, I've talked about maybe property for social impact investment, supported housing, assisted living, where you need to buy cash. You might do creative way of making that happen. But essentially, we've talked about return on investment, we talked about capital growth. These are two variables that are important when you're thinking about your property investment. People that are buying in that, so say the similar person have 100,000, they could have bought property in the UK, in Nigeria, and get cash flow on a monthly basis with potential issues that could happen down the line. They could bring the same amount, say 100,000, buy a property, let's say Dickinson, for example, 88,000 and stuff. They'll still be left with some change. They buy into that, they are getting 7%, 9%, depending on when they're buying or something or what is negotiated. So they're getting that amount of money on a monthly basis. I think the last time I worked that out, that was about 700 plus or something net on a monthly basis. When you think about it, how many years it would take them to recoup their money, you will see that it's very, very small. They've got guaranteed rent. They have more peace of mind. They are getting foreign income compared to what they would have done with the same amount in Nigeria. So you have to understand, this is why we say we go through each person's scenario to understand what works for them. So some people want the cash flow, and student accommodation in areas that is less than 150 are good cash flow. It could be the same situation for the social impact investments, because like I said, this would need to be bought cash. But there are creative ways to buy cash and then maybe refinance and then spread the money again or do something creative on that. So I hope that answers the question on the student stuff. So yeah, but please, you would have a lot of questions. A lot of questions will pop into your mind again. Don't leave this to chance. Reach out to us. Let's have a conversation. You might not be ready now, but let's have a conversation. See what this means. You might know other people that this would work for. Help them to be able to achieve this, because I bet you for free that a lot of people don't understand or don't realize or don't believe it's actually possible as a Nigerian investor to get mortgage in the UK. So that's really the big factor. We're talking about stability of economy, property that you can be guaranteed is being built to the possible highest level of construction standard. It's not going to collapse anytime soon. You know, these things gives you a lot more peace of mind and stuff. So it's a balance. People, like I said, are in a position where they've got the funds, they built something in Nigeria, they're just looking for a way to expand. They're looking for a way to diversify. They're looking for a way to plan for their future. Like, I don't want to keep my future relying on Naira currency only. I want to plan my future relying on I can get rental income from a foreign currency, which would mean I can rely on that more for my retirement. That's really where people are thinking about. So I hope this has been useful. Please drop us a message. Apologies for the early stuff, but what that meant is maybe a lot of people got double portion of the explanation, which maybe might help to clarify things, but I apologize on that. So please, again, you've got the website on, you've got our number by text. just make sure you reach out and we can help you to take things forward. Just want to leave my contact details if you want to reach out by that as well. So you can take our number down. We would love to work with you. We would love to see how we can support you to leverage the UK economy to your advantage and help you to diversify your portfolio. Thank you for listening. Thank you for everyone that's listening. Again, my apologies, but we'll try to. If you have any question, please reach out. That's really the main thing. This is just meant to be an introductory section. We expect that we would come into conversation. Send me a text message. We will find time to make sure we can have maybe 15-minute section with you initially, not to waste your time if you're still early doors, just to understand what you're thinking, what you will need support with, and yeah, we can take things forward from there. There's a lot more we've not been able to touch on today. There's a lot more we get involved with, but for today, we just want to showcase how you, as a Nigerian investor, can leverage the UK financial system and invest in the UK. So that's really the big part. You only need, on average, 25% to be able to invest in the UK. So that is mind blowing for a lot of people. So please make use of the advantage. It's available now, but again, nobody has control. It's available. Sometimes the criteria is strict, sometimes it's not. Well, lenders are available to deal with Nigerians currently. So if you're a cash buyer and all you want to do is to buy cash, please let's talk. We can show you how to get massive level of discounts for your cash purchase. So there's different ways that you can play this game, but just make sure you're working with partners that could find you the right solution that could work with you and make sure that you are getting the best for your investment. So thank you, everyone. I would stop the recording and we would wait to hear from you, wait to see how we can support you and move things forward. Thank you very much.
you.